In this video, we're going to talk about getting a mortgage for foreign nationals with only 5% deposit. I've done a recent article on this, which I'll leave a link below. I've been specializing within this sector for the last 15 years, and I've been dealing with lots and lots of foreign nationals over my time. There are lots of different reasons why you would approach a professional mortgage broker and not go directly or use a normal standard broker. I'm going to detail some of the main key criteria when you're dealing with foreign nationals. We touch on affordability, we touch on deposit levels, we touch on property types, we touch on some of the big issues that I see. Now, what I've done is I've put these in sections in my descriptions below, so you can just click on them, whatever you're interested in. But I'll catch you on the video. Hopefully you'll find it useful. Right, so with that introduction out of the way, let's get into it. So if you're living and working here on a visa, let's talk about the visas first of all, okay? So there are a number of visa types, okay? The most common visa type is a tier 2 work visa. Then there's a tier 1 entrepreneur visa or special talents visas, okay? Now, they are probably the best type of visas to be on to get a mortgage. There are quite a few mortgage lenders that will accept these type of visas. Then you've got the more obscure types of visas. So for example, the family dependent visa or the family route visa. What that is essentially if they've been here for a long time, they may be reliant on a family. And that's different from a spousal visa. There are spousal visa rules as well. So you could be a spouse of someone who's a British citizen, or you could be a spouse of a person who's on a visa. Okay, so there are different criterias around those. So then you've got the family route, obviously. Then you've got things like the refugee visa. Okay, now that becomes a little bit more complicated because there's not that many lenders that will do refugee visas. So there are different, just because somebody says I can deal with a mortgage with a visa, they've got to know the visa. They've got to know the process of getting the visa. So there are different routes to a visa. Some people get a 2-year and then a 3-year extension and then another 2-year, and then they're eligible for ILR, indefinite leave to remain. Okay. Others have to go down a 5-year route firstly, and then they will probably get another 5-year, and then they're eligible for ILR. Okay. So, and understanding that is vital. Okay. It's not necessarily just about the mortgage, because when it comes to mortgage lending, lenders have got different rules and they don't necessarily fit with the visa rules. I'll give you a perfect example. Some lenders say you must have been working here or been here in the UK for 3 years. Okay, well, that's no good if you've come in on a 2-year visa route. Okay, so other lenders would say you must ideally have 2 years left on your visa or 3 years left on a visa. Well, that doesn't really work if you're going to go down that with that lender, if they've got if that lender's got a specific rule around that and you're not within your time frame. So understanding that visa rule is the vital, and that's where a lot of brokers or people directly, they approach these lenders because they read, oh yeah, we can deal with visas. All right, great. What's the specific? What type of visa are you on? And I'll give you another example. So if you're on an entrepreneurial visa, apart from most entrepreneurial visas are on a tier 1 visa. Okay. The difference is there are some people that are on exceptional talent visa, and they're on a tier 1 visa. So most people think entrepreneur visa is a tier 1. It's not necessarily a tier 1, okay? So they'll start asking him for accounts and bits and pieces, and the guy's saying, no, actually, I work for a university, I'm doing a PhD, I'm on a special talent route, okay? Understanding those things will determine where you end up going, because if they're on a genuine tier 1 and they're entrepreneurs, their accounts are structured differently. They've got to show 2 years accounts generally to go down the high street, and it's a complete different setup than someone who's essentially employed. Okay, so that's the visa bit around that. Now let's talk about another big issue when you're dealing with foreign nationals. It's deposit. Okay, the biggest problem for foreign nationals, generally my experience of doing this for 15 years, is the deposit. Okay, now let's talk about the deposit. Biggest problem is generally they don't have a lot of deposit. Okay, good earnings, not enough deposit. Good earnings, a lot of deposit. Now, lenders historically have been really bad at this, right? Generally, the rule was, either they won't do it or you need 25% deposit. Okay. Now, we've been doing 95% mortgages historically with different lenders at different times, okay? And let this change, okay? So there are lenders that will do up to 90%. Now, as you've seen on the image, 95% mortgages, okay, for foreign nationals. Now, there is a caveat there. These are high street lenders, okay? The good news is you're not going to be penalized to get a worse rate because you're a foreign national. You'll get exactly the same rate as me as a British national, okay? That's great. But you'll go through a different process in terms of the underwriting process. And that's the key difference, okay? You get the same rate, but it's a different process and you've got to abide by different rules. And one of the rules involved is where the source of money is coming from. Now, it's great if it's, you know, if you don't have a lot of deposit, the chances are, and you're on a high income, your income is probably the savings is saved up for the deposit. However, if you are selling an asset abroad and you're bringing it here, or your mum and dad is selling an asset abroad and you're bringing it here, that's when things become complicated, okay? Especially if the funds are still abroad. Generally, what we say to our clients is, look, have the money sitting here at least for a couple of months, okay, in a UK bank account. There are a number of reasons for that, right? One, you enable initially the bank that's the money's coming in to do their own money laundering checks. And lenders often like to see another lender have done certain level of checks or the money's been sitting in the UK account. Also, it's not about deposit. Where is the deposit right now? It's the source of deposit. Where did this money come from? Okay. People often come out to me and say, well, I've been declined by such and such bank because of the deposit, but I've had the deposit here. Well, that's not it. If you're on 50k a year, where did you get £100,000? You've only been working here for 2 years, 3 years. Where did that £100,000 come from? It's not your savings because you can't physically make that up. Okay, so it's come from somewhere. Okay, now what we have to do as brokers, as solicitors, as the lender, is exactly tell the lender and exactly tell us where that source of funds has come from. It came from India. What happened there? Who sold their property? Where's the land? Where's the transactions? Where's the deposit? Where's the bank account that the money went into in India? Where's the bank account the money came into here? Where's the receipts for the money transfer? All of those things have to be ironed out properly for you to be able to get through the UK money laundering rules, okay? And it's serious. It's a serious problem if you cannot do that. So it's no point saying I put £10,000 in my pocket and I put it in my bank. You cannot find the source of funds, okay? Especially in this current world right now that we live in, money's flipping. Oh, it goes to this country and then it ends up to this country and it ends up to this country. Source of funds is if you're saying your dad sold the property and you've got some money from that, you have to prove it, okay? Now, that's okay if you're in a low risk country, okay? That's okay if you're in Germany, you're in Netherlands, you're in even USA. Things like that. Generally, the banking systems are actually interlocked together and there's a level of security. But it becomes more difficult if it's coming from Pakistan, if it's coming from India, it comes from some of the what I would call mid-level risk countries, okay? And it gets even worse if it's coming from high-risk countries. Countries like, right now, there's a whole list of them. You're looking at a lot of the African countries, some of the Middle Eastern countries, okay, you're talking about, Iran, okay, you're talking about Iraq, you're talking about even Turkey now, believe it or not, even Dubai, okay, because of the way the international money system works, especially after the war in Ukraine and stuff like that, especially Ukraine as well, money is funneling its way through different countries, okay, so countries that were seen as a safe place are not necessarily that safe now because a lot of money is funneling through those countries. Okay, so what I would say is if you've got money in those countries, it's probably best if you can do without it. Go for a higher loan to value deal and not go through the process because it is a very, very long process because you really have to go through it. And a lot of the banks will not deal with it because it's a sanctioned country, it's a high risk country. So source of funds is fundamentally the most important thing when you're dealing with a foreign national. Okay, and understanding that process is so vital. The key bit is documentation, right? And that's why there's a need for foreign nationals with mortgages with low deposit because they can start using some of their savings because they're generally on high incomes from the UK and from places that can be seen. So if you've got a family member here in the UK and you've got a family member abroad, it's best you get the money from your family member here. If you've got a brother here, you've got a brother abroad, get it from the brother here, right? Because then we can account for it. And also, there's other questions around source of deposit. So most lenders say you can only receive a gift from direct family blood relations, mother, father, brother, sister, grandparents, okay? So direct link. But that's not necessarily the case. There are some lenders that will enable you to receive a gift from a friend. Okay, so if you need that £20,000 and you've got a really good friend here and he's willing to give you that gift and he's willing to supply all the documentation around it, because that's another thing people need to think about. You know, it's all great saying such and such person is going to give me a gift and they're happy to do so. Are they happy to provide their passport? Are they happy to provide their 3 months bank statements from the account it's coming from? Are they happy to give proof of ID, proof of address? Are they happy around that? Are they happy to be questioned around certain things? Okay, because that could be the case. Okay, well, in our case, we will ask for that because we need to identify the person who's making that gift. We need to make sure that that money, that £50,000 money, wasn't in their account 2 days ago and it's now being transferred to your account. So these are basic rules that we have to abide by. So that's another point around deposits, okay? And that's why 90%, 95%, 85% rules are good. Now, let's talk about loan to values and how lenders work it. A lot of lenders, I would say there's about 5, 6, 7 probably lenders that will do it at 25%, okay? Various rules around there, whether you've been here a year, 2 year, 3 year, whatever. They've got visa rules around that, but they'll do it at 25% deposit. There are a couple that will do it at 20. There are a couple that will do it at 10, and there's 1 or 2 that will do it with 5% deposit. Now, the big disclaimer around that, with all of them, is subject to credit score, okay? And how do you know subject to credit score? People say, well, I've just done my Experian or Equifax, and I've got a 999 credit. Well, that's not what we mean, okay? It's the lender's credit score system, okay? The lender's credit score system is not just about a credit file, okay? It's about who you are, how long you've been here, is there a track record on your credit, what level of deposit you've got, what asset are you buying, what job are you in, all of those things. Is it your money, is it deposit money, is it saved up money, is it gifted deposit? All of those things go into an engine, and that engine, that computer says, yeah, this is a good score or this is a bad score. The telling sign is, the biggest sign I think, is how long you've been here. If you've been here for 6 months and you've got 10% deposit, that in all honesty, the likelihood of you getting a mortgage is quite low. If you've been here 5 years and you've got 10% deposit and you've got good earnings, then you get a better chance, okay? If you're buying with a partner who is a British national, for example, then you get a better chance because the overall credit score may be higher. Okay, so, and earnings is also very important. If you're on £25,000 and if you're on £80,000, it will make a difference, okay, because it just shows how much you account. The more you're earning, the chances are the more you're spending, the more stuff you got on credit and things like that. So the credit report is a lot more fuller, because you got to bear it in mind, someone like me who's been here, you know, a very, very long time, I will have a better credit footprint than someone who's arrived a month, 6 months ago, a year ago. So it doesn't matter what job you've got, doesn't matter you're on 200k a year, you still score quite low. So that's where deposit and criteria don't go well together, because you as foreign nationals want to get a low deposit, the lowest, Pam, give me the lowest, I want the lowest, and then you've got this barrier to overcome. So, and it's a bit of an unknown. Obviously, we've got expertise in that, and the key is to go with a lender that does a soft credit search. And this is another point. It's vital that broker, or you, if you're doing it direct, you understand how precious your credit profile is. Okay, how precious those 2 or 3 lenders. Often when you deal with visa clients, they've only got 2 or 3 lenders to go at. If you've screwed it up by putting applications in and you've blown 2 of them and you've got 1. So where you're dealing with a British national, you've got the whole lending market to go to, 80 odd lenders to go to, okay? Subject to affordability and all the other business. But really, when you're dealing with foreign nationals, it's so delicate. There's only a certain amount of lenders that will do the loan to value, that will do your visa, that will do the affordability on a basis. All of those things are important. Let's talk about properties, okay? So often in my experience, foreign nationals hate UK properties. They hate older properties. They like new builds. Okay, that's where Help to Buy was really good, because we were doing a lot of Help to Buys for foreign nationals, and we could do it with 5% deposit, and the government would subsidise it. So, my Help to Buy is gone now. So, what you will find with new builds, generally on new build flats, you need a bigger deposit than new build houses. Okay, and a lot of people tend to go for new builds. Now, I would say if you're going for a new build, try to go for a property that's already been built, or it's going to be built in the next 2 to 3 months. Okay, I would steer clear personally of off-plan projects that this property is going to be built and it'll be built in a year's time or 2 years time or whatever it is. Okay, and I'll tell you why. Most mortgage offers are valid for 6 months. Okay, you may be able to get an extension for another 3 months with a lot of the lenders, and there are some lenders that may extend up to 12 months. Okay, but that's about it. I don't like that for foreign nationals, and I'll tell you why. All it takes is the lender in 6 months' time, when your offer is running out, to say, do you know what, we don't want to deal with visa applicants. And often, remember, we've only got 1 or 2 lenders. So then you're stuck. You've had to put 10% deposit down. You've spent money, and we've got a mortgage offer. So your mortgage has been offered. However, the property hasn't been built. So you can't complete on it. So you've got to redo the whole thing if they pull out of the market or something goes wrong with this, changes. Obviously, the rates can go up and down during that process. If you run out of an offer and they're not willing to extend it, you've got to go for another application. And generally what you find is building, when you're dealing with off plans, these deadlines of completion deadlines, they tend to they're not met. You know, they may be delayed by a couple of months. That couple of months has a big impact on you. Okay, so that's what I would say. If you're going to buy a new build, try to build one that the phase is towards the final phase, or it's going to be built in the next month or 2, or it's already been built and you can look at it and it's, you know, the valuers can go around. Because if you're going for a mortgage application, the value is literally just going off plans. Okay, and they'll go, yeah, we'll give you a mortgage offer, we run your affordability. However, in 6 months' time, you don't want to be sitting there with uncertainty. Okay, and bear that in mind, because another caveat is when you're dealing with developers, often these developers will go, and it's a bit underhanded what they will say, or estate agents, they'll go, well, if you go for our guys, they will check you and they will do this and they will do that, and we will give you a preferential. They shouldn't really do it, but you know, you'll be, you know, your offer could get accepted better, or you know, there'll be a short in time and everything's in process. But unfortunately, those guys don't deal with visas. They don't deal with foreign national applicants. Hopefully by now, if you've stuck around, I've told you why we understand what we understand and what are the reasons around what we do. Okay, so that person, that 20-year-old sitting there with a bank of 200 brokers, they don't deal with this stuff day in, day out. So they have no idea about some of the complexities and some of the issues around foreign nationals. Okay. Another thing, let's talk about occupations of foreign nationals. Okay. So a lot of IT consultants, could be on a daily rate, they could be contracting, they could be working on an umbrella setup. Those things, you have to take that into account. You've got on tier 2 visas, a lot of doctors, a lot of accountants, a lot of solicitors, all of those things, they're there. Now, potentially there'll be preferential products for those people. Now, preferential products are there for accountants, doctors, and solicitors, but they may not have the visa criteria for it. So a normal broker will just go and do, oh yeah, but this lender's really good for solicitors, but they may not understand the visa barriers to it. Okay, or an umbrella setup, for example. Okay, a lot of people work on an umbrella company, and in terms of experience, how you prove the experience, generally, you know, some lenders want a year or 2 experience within that. If you're a new doctor, that could be complicated. So all of those things come into effect when you're dealing with foreign nationals. Okay, so, and then you're talking about things like solicitors. So we've got a list of solicitors that deal with foreign nationals. They understand the process. They've got their own list of countries they can deal with, they can't deal with, all of those things. And for us, the target is for you to buy that property. If you buy that property, great, everybody wins. Okay, if you don't buy that property, I don't charge you anything, so I don't win. Okay, it's in my interest for you to go against somebody else, and this is the mindset. You go in as a foreign national for a property. Okay, so do 3 other people that are British. Okay, who do you think the estate agent would prefer? You or the 3 British people. There's a certain amount of certainty with those people because if they put an offer in, they know they don't have to go through as much barriers as you. So what we have to do as a team, and it's a team thing, is we have to make sure that estate agent feels confident enough to give you that property. So how do we do that? Well, we do that by doing our due diligence, picking the right lender, giving you an agreement in principle from the lender. This is another thing I've come across. Oh yeah, I've got an agreement in principle from XYZ broker. Well, that's not going to mean anything. It's like me writing a letter saying I think you can get a mortgage. Doesn't mean anything. What I say doesn't mean anything. Has to be backed up by a lender, okay? And there's a false sense of security with that as well. There are so many times I've seen agreement and principles from lenders that will not do visa applicants. But they've got, the broker's got a visa applicant, or they've got an agreement in principle, and I know that lender will not accept source of funds from abroad. Full stop. And their deposits coming from abroad. So agreement in principle is just a credit search. All they've done is put your details in there, and the system has said, yes, based on this, we'll do it. Okay, hasn't done full underwriting on it. So this is where you've got to be watch out for. But really, you get an agreement in principle. You go to an estate agent and say, look, I'm interested in this property. Here's my broker's details. Go and check them out. Here's a lender's decision in principle certificate. I've already got it. Here's my solicitor's details. It's here. Here's my proof of deposit, organized in the right way, because the estate agent's got to do their own checks. So there's there. So everything's in a file. Everything's sorted out. So what's the objections? Here's my affordability. It's already worked out, obviously agreement in principle. So then really you're giving them the best possible, you're not giving them any reason to say no, because you've got it all there. You're organized. You've sorted yourself out. That's the difference between someone who's going to win a bid, if you're going under the market at the moment, there's some good deals around, then someone who doesn't. Someone just walks in and go, yeah, some brokers told me I can get it. Here's an email from them. That's not good enough, and you're not going to win there, right? And these are the issues. The biggest issue is you've just got to be careful how you approach these lenders. Like I said, is choice of lenders are very, very limited. I hope you found this useful. Go and check out, I've done many videos on this subject. I've done videos on proof of deposit, more detailed stuff about deposit, more detailed stuff about contractors, more detailed stuff about foreign nationals with a visa. But I hope I've sort of highlighted some of the things you need to be aware of if you are someone living and working in the UK on a visa. And I'll catch you on the next video. Take care, all the best. The content of this video does not constitute giving advice. It's purely for information purposes. All cases should be discussed with a professional mortgage broker. As a mortgage is secured against your home or property, it could be repossessed if you do not keep up mortgage payments. Niche advice is authorized and regulated by the Financial Conduct Authority.